In today's video, I'm going to look at the cycle structure of the precious metals market. I tend to think that we probably got a final intermediate cycle low here. But if we didn't, I think you can still start buying here, or you could even be finished buying here. I think this is close enough. If this is a final intermediate cycle bottom, then we're 3 days into a new cycle, but we don't really have enough confirmation yet to say for sure that that's the case. If not, then we're 47 days into this cycle, which started right here. So at 47 days, there's not many days left before this daily cycle bottoms, and when this daily cycle bottoms, the larger intermediate cycle bottom is going to occur as well. So what I'm trying to say here is if the gold was to roll over next week, come down and drop below this pivot, I don't think you need to panic. It's not the beginning of a new daily cycle that is left translating on day 3. It would be day 48 of this longer or of this entire daily cycle. And I have seen a few cycles run over 50 days, so it's not completely out of character for this. If this were to continue down, break this low, and continue a little bit deeper bloodbath phase, it's not completely out of the question to have a cycle that runs 50 plus days. But what I'm saying is that at 47 days you're close enough. And so even if next week we come down and break this this low, and maybe we come down to test the July low, maybe we come down and make a marginal undercut of the July low, it's not, you don't need to stop out of your positions at that point. And I kind of think it's maybe a wrong strategy to stop out. You want to stop out if it's early in a daily cycle. So let's say right here back in October, if this move here had moved below this October low and you were long, you would most definitely want to stop out at that point, because it's just very early in this new daily cycle, and the risk is that you got a lot of days left and this could go down a long ways before finding a bottom. But at 47 days, there's just not much time left for the cycle. If it comes back down, breaks this low, there's just not enough, there's not very many days left for this to drop. So I don't think it would be a great idea to stop out if this low is broken, because the odds are it's going to be only a couple days before the cycle bottoms. Possibly this is just a marginal undercut. How many times have we seen that? The banks manufacture these kind of things on a regular basis to trigger stops that gets everybody to sell their shares into panic, and then the banks scoop all those shares up at the bottom. So the bigger picture is it's late in the daily cycle. This is close enough. I tend to think it probably is the intermediate cycle bottom, but if it isn't, then the intermediate cycle bottoms is probably going to occur at some time next week. So even if you don't time it perfect, you're close enough. The bigger picture here, the weekly stochastics are oversold, as I've outlined many times in the past. It's not usually a good idea to sell into oversold conditions. It's better to be buying when things are oversold than selling when they are overbought. So this is an area where you want to be thinking about buying, not stopping out of positions. Same thing on the mining index, again, heavily oversold here. Same thing on the weekly charts. The RSI also oversold. TSI is getting oversold and possibly starting to turn back up. In a bull market, price doesn't tend to stay oversold for very long on the weekly charts. And you can see this bottom here, just a quick tag, all of these, quick tag of oversold, and then a new rally starts. We've got oversold. Probably, again, like I said, close enough. And I think that once this intermediate cycle gets going, whether it started last week or whether we've got one more undercut to deliver next week and then we get started, however it works out, I think this next intermediate cycle is going to break out of this basing pattern. So here we had the baby bull, one of the strongest rallies the mining sector has had probably in history. Had a very deep, sharp correction off of that. That pushed us into this frustrating basing pattern that we've been in all year. Here's one intermediate rally, and then we've churned around, dropped into this bottom, another intermediate rally, but again, not enough to break out. Another very frustrating multi-week, multi-month decline. But once this is finished, whether it occurred last week or whether it occurs this week, then I think this next intermediate rally into the spring of 2018, we're going to break out of this consolidation right here, and I think we're at least going to test the baby bull top here at $32, and maybe we even push a little above that, but I think we're setting up for a very nice rally. The commercials have covered most of their short positions in the gold and silver, and sentiment has finally dropped down to bearish extremes. All during this decline, I kept cautioning the early bulls that the COT really hadn't reached bullish levels yet, and that sentiment was still neutral, not really the kind of conditions you want to be buying heavily at. Well, all of that has turned around now. We've got oversold conditions. We are very late in not only the daily cycle but also the intermediate cycle. The commercials have covered their short positions and are modestly long in the COT reports, and sentiment has reached bearish extremes, consistent with an intermediate bottom. So at this time, I think it's close enough. I think you can start buying, and I don't think you need to panic if we were to make an undercut low next week.